G'day, money miners. Welcome to a bloody good start to the week from, you'd say, a bit of a fan of uranium.
We're up, Matty.
Oh, we're up. Brought to you by Axis Mining Technology, the bloody trusted advisor and drill hole survey instrumentation. Axis are alive and well. And so is Trav. For all those people that have been concerned about his well-being, he does exist in the flesh.
I'm still here.
We didn't want to clarify that you were alive or anything. It was more interesting watching all the YouTube commentators wig out.
Just speculate, yeah.
Yeah.
You know, there was a big YouTube group, and like one of them just went missing, and they never addressed why.
Yeah, I remember you telling me about that.
Yeah.
Did they ever come back?
Yeah, no, that member didn't know, but they just thought the audience wouldn't
notice.
Notice. Anyway,
that's
not us.
Anyway, JBD, welcome from across the ditch. He's going to be back in the flesh this week. We get to touch him.
That's it, mate.
Right, we're going bloody. She's actually a bit of uranium at the start. There's two bloody uranium stories. The old Kazatomprom announcement on Friday, and there is a bit more going on in the world of Energy Resources Australia, ERA.
There is
the great
indeed.
Jabaluka. It is interesting. Trav's gone bloody deep. I don't even know how to surmise it, but it's just out there. What's going on?
And on the other side of the spectrum, Pilbara Minerals reported their half-year results, right, JD?
Yeah. I mean, got the annual results actually today, and amongst a raft of other annual numbers coming out. So I don't know why, but I touched on that one again. It seems to be one people are kind of interested in, but we'll see. And then also, I thought we'd have a quick chat if we have time about the dividends and the companies not paying dividends as well, just to tie on at the back.
Yes, righto. Let's get into it. So it feels like this is my calling when like there's any Kazatomprom stuff. It's like, and good to see you just logically put it at the first story, JD. Like there's good pecking order there, mate.
Mate, we'll save ourselves a bit of work. Just slot it in nicely at the top.
She is all green on the screen for the Aussie U stocks. Most stocks up 10% today. Painful first day for the shorters, I'd assume. So if you looked at the last numbers of the short positions, which T+4, so this is probably last Tuesday, Paladin, Boss and Deep Yellow were all around 9% shorted. So we don't know yet if any of them were unwound slightly by the end of last week because of the 4-day lag. So check Shortman on about Thursday and you'll figure out what it was before this announcement. So let's set the scene. So because pretty much just after the ASX closed on Fridays when Kazatomprom come out with their first half 2024 results, which was sort of already disclosed at the start of August, but what everyone was waiting for, the 2025 production guidance. So I'll start with the results first, then we'll get into 2025 and beyond. First half physicals, which as I said, come out on 1st of August, along with their updated 2024 guidance. So they said they got 10,857 tonnes of U for the first half with updated 2024 guidance of midpoint at 23,000 tonnes of U, which was up from their previous guidance that they slashed back down of 21 to 22 and a half. So this, at that time when they released that, so the pre-announcement, that actually sent the bloody equities down because they actually lifted beyond what they were thinking for the year. But you look at those numbers, they're anticipating or guiding for a much stronger second half than the first to reach that 2024 guidance of 23,000 tonnes. So they're going to have to hit a bit over 12,000 tonnes of U for the midpoint. So, and when we say U, that's tonnes of uranium, times that by 2,600, and that'll give you million pounds of U308 equivalent. So, JD, you're squinting at that. It's a uranium's tons of U to U308. It's not 2,200 like kilo to pound. It's actually 2,600. Must be a bloody density thing. So now, and also the new info that come out on Friday that wasn't released prior was the inventory levels. So you can see that they've dropped a further 20% year on year on a 100% basis for the Kazatomprom operations, and then they've dropped 31% on Kazatomprom's attributable basis. So for you can see that they've only got about, on the Kazatomprom attributable production, they've only got now about 4 months of production in inventory. So look, Benny Feingold and the Ocean Wall team did a great note on this Kazatomprom news, and you can see in the table below from their note that inventories have well over halved since 2019. And so by the end of this year, they'll be possibly at 9-year lows. So, and that's based on them hitting the midpoint of their revised 2024 guidance, so FY24 guidance. So I guess what does this mean is if Kazatomprom don't hit their midpoint, say they achieve 1,000 tonne a year less, which is 2.6 million pounds, and if they want to maintain inventories because they are so low, that means there's potential they'll have to start going into the spot market to purchase those pounds. So maybe like for every 1,000 tonne a year they have to get, that's 2.6 million pounds in the very thinly traded spot market. So
in simple terms, is that inventory depleting because, they're contracted to supply an amount that they're not quite, not producing?
Not hitting the physicals. Contracts are contracts, and like they've notoriously said, there was a comment here saying that they've notoriously kept some uranium uncontracted to leverage off the benefits of potentially selling at a higher spot price, but then the wording is that has resulted in them depleting because depleting inventories because they haven't been hitting the targets, so they've been having to use that
which
to
puts
actually
them in a more fragile situation.
Very much so. So 4 months of production on a big scale. It's yes, very interesting. Now 2025 and beyond. This was you'd say the big news that came out. Whatever everyone was waiting for. So from a combination of construction delays for their sites, potential for limited access to sulfuric acid supply to continue, which they're pretty much saying is inevitable until they get this sulfuric acid plant properly built on site. They've slashed their 2025 production guidance from 31,000 tonne a year to 25,750.
Wow.
So yeah, that equates to a cut of 17.3 million pounds. So that's the output of Cigar Lake.
Wow.
Wiped like that. So that's been the big kick. I know everyone was sort of thinking that was what was going to happen, but there was the feeling that Kazatomprom, they just always over-promise and they'll just keep over-promising, but they actually went bang.
They're like, look out.
Yeah,
realistically,
so whether
who knows,
they might be over-promising on this too. Who knows?
So the 25,750 is still higher than what they're going to produce.
So it's still higher than what they have guided for this year. I think it was 14% higher.
Yeah.
And because the whole thing is around the delay in ramp up to Budenovskoy, which is that's the big humdinger that is coming online, but there's been delays. So I'll get into that. So because when they initially guided this whole 2025 onwards, when they said they were going to get 31,000, which is like friggin' 80 million pounds, they said they were going to be increasing to 100% of their subsoil use agreements across all their tenements. So those subsoil agreements means they've got I think it's like a competent person report to say this is the production volume to come out of there, and they have to produce between 80 and 100% of that. They can't go above 100%, but they can't go below 80% either. They have to produce in that range. So what this is, they've actually mentioned that they're renegotiating some of these subsoil agreements because they're at risk of actually falling below the 80% threshold. So they've gone from saying they're going to produce at 100%, as much as they can get out of it, to now at risk of not even producing at 80%. So they're going to have to renegotiate those subsoil agreements so that they're not at risk of going below.
Why would you produce less than 80? Are you just constrained physically?
The acid supply. They haven't got enough acid to bloody maintain the production, whether there's been operational challenges or the competent person report hasn't truly reflected what's coming out of there. And because I think the lack of stability around that sulfuric acid supply means that if you start putting less in, I think it can be detrimental to in terms of the geology of it to maintain that sort of steady state. So I would compare it to how Stoitis talks about a POX plant. He says it just needs to keep going, and the temperature needs to be high. It just needs a steady state.
Yeah.
And my understanding of this, based on fuck all, is that it's probably the same here. So they're the ones they're renegotiating that they've mentioned are like Budenovskoye, that's the 51% Kazatomprom, 49% Russia's Rosatom, and APAC, APAC's a lot smaller. That's 65% Kazatomprom. This is a Japan one. So with 25% Sumitomo, 10% KEPCO. So that's where they're going to introduce changes to the subsoil use agreement. They're two of the ones. And I guess before we get into the numbers, I'll show you the chart to give a bit of context around how big Budenovskoye is. So you can see it here, what this is circled. That is the amount of uranium that Budenovskoye was going to contribute. And that has been significantly pushed back because I was saying they were going to get 2,500 tonne in 2024. Mm-hmm. That's been slashed to 500. 2025 was supposed to be 4,000 tonne, now guiding 1,300. And 2026 was supposed to be nameplate, 6,000 tonne, or 15.6 million pounds, now 3,750 tonne. So nameplate capacity not expected before 2027, so like 1-2 years late. And the first 3 years of production out of that mine is all committed to Russia. So it both delays that uranium getting to Russia, but then also delays beyond that the potential of any of that uranium coming to the West. So it's a bit of a
question without notice. Is like
plenty of them
because there's a delay. Are they still going to have some contractual like obligation to provide Russia X amount in the this 2025 when they're supposed to be ramping up and they have to buy it on the spot market? Or
I'm not.
Maybe
because it's such an opaque market. You would assume that the contracts are a volume basis. So I think when they said first 3 years of production was based on that previous ramp up rate. So whether they have to either use inventory or use their the spot market, as you said, to fulfill that, not sure. Yeah. That'd be uranium contracting is obviously very opaque, especially the Russian contracts. That'd be the hardest one. If anyone's got info on the bloody Budenovskoye contract, let us know. But yeah, it's exactly what you say. They'd be between the inventories and the spot. I would assume Russia would be like, you still have to fill that. You've said you were going to get this.
You still have to fill it.
Love it. Love it. So now another interesting part was the sensitivity table they put in for that revised mineral extraction tax that we talked about start of July. Now, I'm not 100% confident on the interpretation of this, so feel free to message good old gc@moneyandmine.com with any different interpretations. But this is what came out 1st of July, that we saw this tiering tax rate based on the annual production volume for each subsoil agreement, plus an additional tax based on the spot price. I interpreted this as your Budenovskoye, your KATCO, that's the Urano JV, your Inkai, which is the Cameco JV. They were the three biggest producers going forward, and we interpreted it as like they're the ones going to get hit with the highest tax because they produce the largest amounts of volume. But the sensitivity table they put in, it sort of now says that those like tax, like between the spot price and like the tax rate applied to percentages of CPR production volume. Now, CPR is the competent person's report, which I assume is the subsoil volume requirement for each subsoil agreement. It looks like that those tax rates are based on the percentage they take out of those subsoil agreements. So even if they're a smaller producer, if they're producing 100% of their subsoil agreement, even if they're smaller, they're going to get taxed at that higher price. That's how I interpret it. Didn't appear to be a volume thing now. It appears like a percentage of the subsoil use agreement. So,
wow.
Yeah, so that's even less of an incentive to increase production across all the things. That's how I interpret it. So happy to get bloody clarified on that one. Perfectly, and it also shows how much more sensitive an increase in production is compared to an increase in spot price. Because if you look at today's spot price, a 10% lift in production increases the tax by 2%, but a $10 lift in the spot price only increases the tax by 0.4%. So perfectly articulated by, I'd say, Mike Olkin 2.0. Art Hyde on Twitter. He's fucking all over it, this bloke. So he says that this is just future proof that Kazatomprom are incentivized to produce less and not incentivized to cap uranium prices because of that sensitivity. So good on you, Art. He was all over it as soon as it come out. I think he even half predicted this is what was going to happen in a tweet the day. Oh, mate, he's a friggin' love the bloke. Love him. So what is brewing here? Let's sum it up. Continued sulfuric acid supply issues seem to be the thing still for the inevitable future. And they're not even releasing 2026 guidance until at least this time next year. So can you think of, like, for, I guess, any commodity, like where you've got the biggest supplier of something in the world and you don't know what they're going to be sort of producing in a year's time? Like,
wow, that's a great question.
Does anyone, like, is there something that you can think of where there is that much uncertainty about the biggest supply of something?
I can't think of one.
JD, you'd be all over this. You're a macro.
I think the margin of error around here is way bigger than any other commodity that kind of comes to mind. I mean, that number, I'm not sure if you quoted above, I didn't hear it, but that is like a super substantial amount of world supply that's just been chalked off. Like, I'm not sure what
I think it was 12%.
Yeah, I had 12%. Sort of 11% in my mind, but I wasn't sure if I was speaking out of school there.
Yeah,
that's a huge amount. Like, we talk about it often in the context of copper and Codelco and them missing by, 50,000 tons, 100,000 tons, and they make up maybe sort of 5 or 6% of the world supply of copper. So this is just a whole nother league of what we're talking about in terms of scale. There
you go. Chop that up into a Twitter short for me, someone. Bloody everyone's been chopping me up. I'm fucking loving it. Keep them covered. Ali, it takes the load off Ali to do it. Bloody. So, look, and potentially if they miss this 2024 guidance, that, as we said, they'll have to, for every 1,000 tonne they miss it by, that's 2.6 million pounds. They've either got to draw down the inventory or friggin' go into the spot market. Remember, they've only got 4,000 tonne in inventory right now. So less, and as I've said, less chance of good chunks of, like, going forward, good chunks of this Kazakh uranium getting into the West for the next few years because there's so much of it weighted towards going to friggin' Russia. So, and how's Russia going to fill the void? Spot. Inventories, who knows? And look, China also approving last Monday approved another 11 nuclear reactors across 5 sites. Word on the decline there, chatting to a lot of parties about contracting purchase agreements, JVs, which, ain't easy because it's China, no doubt. But WNA next conference starter next month. That's the historical catalyst when all the big togs are talking uranium contracting, and conveniently timed at the conclusion of the Northern Hemisphere winter, which is historically the lull period in prices and everything. So another random one I got tipped at the bar and me shop at lunch. This come from, you'd say, Subiaco's biggest U-bull. Conveniently ran into him before the story. You got NVIDIA reporting their second quarter FY25 financial results this Wednesday night, Aussie time. So the whole data center AI thing is just that another piece of information that always seems to have a bit of an effect on uranium these days as well. So that's another one to watch out for coming this week to see what effect that will have. So
super interesting, mate.
Fucking what a day job. Love it.
It's been a like a challenging sort of 6-month period for uranium equities, but you kind of sense that contracting cycle, now the production guidance, you kind of sense that the thesis is doing a little bit of a tilt again, isn't it?
Yeah. It'll be interesting to see if there's any short squeezes are going on. If it does get a bit of bloody momentum, who knows? It's a bit going on. Anyway, you just never know. Oh, fucking bloody
Good stuff, mate.
What a day.
That was impressive.
What a day.
Yeah.
Thanks, Ben Feingold and Art Hyde and shit for all pretty much copied everything they said.
To a company that wishes they were in the predicament that Kazatomprom is.
Oh.
ERA.
Yeah. They're guiding £0 and at least their guidance is unchanged.
Yeah, no, very true.
Yeah.
It'd be a luxury to be able to provide guidance for these guys. But pretty interesting thing has happened to them today. And for context to anyone that's like new to the story, ERA, they got effectively two uranium assets. Ranger and Jabiluka are both in the Northern Territory, pretty close to each other. Ranger is a rehab project, and there was some hope of one day developing Jabiluka, which has been subject to pushback from the Mirarr traditional owners for a long time. A month ago, the rug kind of got pulled from those potential plans one day when the federal government effectively stepped in to prevent the Jabiluka mineral lease from being renewed. It should be noted that that Jabiluka, mineral lease gave the Mirarr people a veto right over any future development. So the federal intervention can, fairly be characterised as actually removing power away from the Mirarr people. And now because ERA is spending a lot of money rehabilitating Ranger, and because this company is controlled by Rio Tinto, the rehab is expensive as all hell. In fact, they estimate there's another $2.4 billion that needs to be spent on rehab here.
And that's on top of nearly $1 billion already, was it?
Yeah.
Fuck me.
And the funny thing too is that 2.4 it's kind of in discounted real terms. So if you look at the actual dollars that will need to be ultimately spent, it's closer to $3 billion.
And when you talk about Jabiluka getting developed, like for people that don't know, there is a fucking decline that has been excavated down to the ore body already. It's been backfilled, but it's not. It was starting to be developed back in the day, which is very interesting.
And so ERA, they're running out of money fast doing this rehab. In today's announcement, they say they're likely to breach their minimum cash reserve of $50 million in Q4 this year, and then deplete, basically deplete the cash near the end of this year or the start of next.
Yeah, so this raise was, I guess it was flagged and everyone knew it was coming up in whatever shape or form, but it's a bit different because everyone just assumed it had to be an entitlement offer as per the previous ones, but the trading halt today is very interesting.
It is, right? It's normally you see a trading halt and a company's in trading halt because they've launched a capital raising, but today they're in a trading halt not because they've launched a capital raising, but because they're launching a wide-based market sounding to seek interest in participating at a capital raising. They say they're going to need to raise a minimum of $210 million, but of course they want more than that. They've got to spend a lot more than that over time. And in reality, like that's going to be a small drop in the ocean when you think about the remaining kind of rehab that's required to be spent here. The other really important dynamic at play here is that of the shareholders. Rio Tinto has above 86% voting power in ERA. The balance is dominated by two other shareholders, being Packer & Co. and Zentry. And now, as ERA aims to raise money, if they can't get enough inbound interest from the minorities or new shareholders, then that would in effect see Rio Tinto kind of ending up with a potentially greater than 90% ownership of ERA. And if that happens, Rio Tinto can actually compulsorily acquire ERA at a price which I'll kind of discuss a little bit later. And here's the challenge at play for the minority shareholders. Think of Packer & Co. and Zentry. They either need to stump up a lot more cash to participate sort of pro rata and prevent Rio Tinto from getting to that 90% threshold, or they need to attract others into the mix to become sort of minority shareholders alongside them to ensure that there's some sort of minority shareholder holdout preventing Rio Tinto from getting that 90%. But attracting others is going to be difficult because with Jabiluka's mining lease not renewed, what's the investment case here? It becomes a lot more challenged. And ERA, they're embarking on legal proceedings to contest this non-renewal, but at a minimum it seems like a futile kind of endeavour. And there's one more thing that I think is important to mention. even though the assets might never be developed, Rio Tinto, they probably have a strong incentive to acquire 100% of ERA because it lets them kind of consolidate potential deferred tax assets or tax losses, which can sort of be useful to the headco Rio Tinto. So there's an incentive for Rio to acquire 100% because of some sort of tax efficiencies.
Yeah, and before you get into what would happen if Rio do get above 90%, how interesting would be this book build going on at the moment in terms of if someone wants to tip in, ERA are nearly the independent ERA board are nearly incentivized to make this as dilutionary as possible to take as much off Rio Tinto. In a way, are they? Because if someone's willing to tip into this, the person that wants to tip in the most usually sets the price.
Yeah, well, Rio will effectively participate pro rata. That's kind of a given. So it's really up to non-Rio Tinto shareholders to come into the mix or participate pro rata as well. But you're getting into big dollars for funds that aren't as big as Rio Tinto. So it's just getting enough money. If Rio Tinto participates pro rata and you can't get enough existing or new money, then in effect Rio's ownership grows, doesn't it?
Yeah. So because is there any, like when they're saying the capital raising, like it doesn't detail that it is going to be an entitlement offer?
No,
not?
But I would expect it to be an entitlement offer. I think it's the most, when you're talking about it's a $350 million market cap and they're raising 210, like an entitlement offer sort of makes sense because you've got placement capacity issues and all the rest. But
there'd have to be a separate thing to the entitlement offer to get the new people in, yeah? I know it was the last one they did was a renounceable entitlement offer, which meant that, your Packer and Co's could offer some of their entitlement to other people.
Yeah.
But it'll be interesting to see if this one's going to have an entitlement offer component. If they're sounding the market, I assume there's an actual a new one.
There's a few mechanisms you can use to, you can bolt on a placement with an entitlement offer to bring in new institutional money, or if it's renounceable, then, existing shareholders who aren't going to take up their full entitlement have the ability to, pass them on to new shareholders. But you
couldn't go a placement because then Rio could just say, we'll take the lot.
Yeah, I think a placement's challenged for a couple of reasons: placement capacity, etc. It's kind of interesting though because there is a precedent to talk about here, and I want to talk about what would happen if Rio emerges with greater than 90%. If that happens, all Rio Tinto has to do is lodge a compulsory acquisition documents with ASX. Rio Tinto sets the price, right, of that acquisition. And all they have to do is attach this independent expert report supporting the fairness and reasonableness of the price that they chose. Earlier this year, there was a strikingly similar precedent on the ASX. The major shareholder of Carawine Resources was Q Gold, and they found their way to owning just a slither below the 90% of Carawine. The way it happened, in late 2023, Q Gold owned 88.2% of Carawine. In October, Carawine launched a renounceable entitlements offer. It wasn't underwritten, but it was just a renounceable entitlements offer. Q Gold's subscription to that offer was 4.28 million of the 4.81 million that the company was raising. The entitlement offer and the company, that they only raised $40,000 from any other shareholders other than Q Gold. So, pretty much people kind of read the tea leaves and figured there wasn't much of an investment case to tip in here, knowing that there's a compulsory acquisition on the way. And so, in effect, on completion of the entitlement offer, Q Gold emerged with effectively 90.6% of Carawine. And just over 4 months after the completion of that entitlement offer, so in March of this year, Q Gold, they lodged its forms to compulsorily acquire the remainder of Carawine, and they simply set the exact same price as the rights issue 4 months before that, 11 cents a share. They just
backed up by their independent
expert report, fair and reasonable. Now, and when you compulsorily acquire like this, there's an objection period where those minority shareholders, they can object if the squeeze out is deemed to be unfair. This happened in the case of Q Gold. 38 shareholders of Carawine have objected, but the Corporations Act Section 664F, it allows for the acquirer to just apply to the federal court for approval of the compulsory acquisition, which has happened in the case of Carolina too. That's still playing out, but there's mechanisms to still get it at the price that you said, even if there are objections.
So it's still even like you're saying the minority shareholders can object, but they're pretty much got fuck all chance.
Yeah, maybe if they've got legs to stand on, if it's not fair and not reasonable, that I think that's where they might have a leg to stand on. But if you think of the dynamic with Rio Tinto and ERA, I think a similar thing will probably happen here. And the price that this capital raise that they're embarking on at the moment gets done at is pretty important, because I would see that as the base case price that the minority shareholders kind of get mopped up for. And given this, I imagine it's going to be like a particularly challenging to incentivize any new shareholders to participate in the capital raise too, because you participate at a 40% discount, and then Rio just mops up the rest sort of like 6 months later at the exact same price or whatever.
It's a certainty, right?
It's. I think there's downside, but there's not upside. But
Zentry, they already applied to the takeovers panel before this had even happened, and the takeovers panel were like, "Hang on, the entitlement," and you're like, you're jumping before the gun. So I mean, they've kind of showed their hand, and they're kind of horrified, thinking or knowing what's going to come, right?
And when you think of like, okay, what's the independent expert actually going to value ERA at? Like, there's not much you can build a valuation around. Like, whatever Rio kind of says is the price might just be the price.
Well, look at the Spark chart. That was up. Friggin', it's in the ones now. It was up to bloody like 7 and stuff. So like, if you're just going off the last traded price, like far out, it should be very, very low price that this could get done at. I don't know if it's going to work like that, but it's An
independent expert could make a pretty good argument that this is worth negative money, right? Like you've got no leg to stand on to write Jabiluka, and you've got a huge rehab cost.
Yeah, I think they'll be anchoring to the rights issue price, and I honestly just imagine I just imagine that'll end up being like the price the minorities get mopped up at. There's a liquidity event, and it's not the liquidity event that any of them wanted, but that'll just be the way it is.
I think there's a lot. Bloody politics taking me by the balls these days. But it's interesting that this is on the back of Northern Territory had a freaking huge swing, and the country Liberals just got back into power there. 16.5% swing against Labor. So the government's actually just changed in Northern Territory, and then the fact that this got put to was it a High Court appeal or a court appeal for the Labor's plans to actually put Jabiluka within the Kakadu National Park and lock it away forever. The fact that this court could actually delay that from happening now, and with the upcoming election, I think there's a lot of I see this is very political about what is actually going to happen here, because the political influence over how this gets dealt with is very substantial.
And the royalties from it,
clock's ticking.
Totally. And the royalties from it, if it ever got developed, would like make a huge difference to, Northern Territory's budget.
Oh, shit, yeah. And that was, and the options that were touted when they, as you said at the start, when the power was effectively taken away from the Mirarr people and we saw the announcement come out that, Boss were offering looking to give a free carried interest to the Mirarr people for that project, and the royalties attached to that. So there's a lot at play. This is definitely not over.
Yeah.
Oh, mate, unbelievable. I'll have to look at the actual figures, but I'll just, everyone's like, Australia's got the biggest uranium resource in the world. I just want to know the percentage of what Jabiluka and Olympic Dam contribute to that. Of saying we've got the biggest uranium resource in the world, because Olympic Dam can only get out as much as they can get out, and this one is a long, long time away if it ever would happen. So send me through the figures, anyone, if you got them.
I don't think you can call it a resource, like in because there's got to be reasonable grounds for if it becomes part of a national park. I think you can't call it a resource.
No, exactly. Yeah. Yeah, exactly. But I think they're just using that as a figure.
Yeah.
Yeah, good stuff. Bloody. Oh, so for the book build, I've got an out there idea.
Yeah.
This could be. So if bloody any of the desks are listening, this is the phone call I'd be making. Because imagine, like, considering all the rehab liability that has to be done, like a shitload of dirt to get moved to fill the pits in.
So pit 1, there's 2 pits to worry about. Pit 1 is kind of been backfilled. Pit 3 hasn't. Requires a lot more backfilling.
Yeah. So a lot of dirt to be moved, a lot of yellow gear. Imagine now we know MMS like a good JV.
Yeah.
So imagine if they did a JV to do the rehab, but then in exchange for tipping in as a new investor in ERA as part of the book build. So a bit of a move rock for equity arrangement. Similar to a drill for equity, but now we're moving rock for equity. Mate, MMS, based on what we've seen so far, I don't think this is out of the question to get them up to bloody Jabberoo.
Do you know what,
set up
mate?
a bit of an office.
That's a win-win-win because they quote, $2.4 billion rehab remaining. If it was MMS running the process, not Rio Tinto, that'd be 0.4 billion.
Yeah, well, because you think you're doing the equity for rock moving, so that's slashed $1 billion off already, effectively. And that's probably not the dumbest idea. I think I would not be surprised if we see MMS pop up on the register for ERA. So they're going big. JVs for moving dirt in open to get people mining or rehabbing is what MMS do. Bloody the desk, give MMS a call. I'm a connector, JD.
Mate, you're doing God's work.
Mate, righto, JD, get into the bloody all the dollar signs, mate. For the we've got financial results all across the board. We're gonna start with your bloody mates at Pilbara Minerals. They're not your mate; they're just a company. But
just a company.
Just a company. Full year results today. Cobber, what caught your eye?
Yeah, you're dead right, Matty. There are some big numbers being thrown around. So the first thing that stood out is the year-on-year cash change. So it was down $1.7 billion to $1.6 billion. So there was 3 big players in that. You've got a huge tax bill from the bumper profit the year before. You've got a massive amount spent on CapEx and a little bit on exploration there as well. That's a plus $800 million number. And then over $400 million in a dividend. That was for the period before that came out in earlier this year. So the net cash position, a couple of ways of looking at it, it's $1.07 billion if you take in the convertible bonds or lease liabilities. But what they report is a $1.26 billion net cash position.
Jeez, that taxes are raw, isn't it, JD?
Oh, it's horrible. Just kills business, doesn't it, Matty?
They want their pound of flesh, this government. Far out.
They do.
They do it to us too.
Oh, we best not get started on this, mate. We'll just get angry.
Continue, mate.
So the next thing that really stood out is what happened to underlying NPAT. So that was a 86% fall to a $318 million profit. Now, obviously, no surprises. We've gone from a period where prices were just insanely great to pretty grim. That all happened pretty quickly. And for those wondering, if you're not from a sort of financial bent, maybe from a operational type background, the net profit we're talking about here, that's an accounting construct. So it doesn't reflect the actual cash change in the business. Only a portion of the CapEx is captured in that, in the income statement through depreciation, amortization there. Hence, you can have a $300 million profit, but the actual cash change goes from $3 billion to $1.3 billion net cash.
Very, very good explanation there, JD.
Thank you, mate. One more to round out on the earnings side of thing, and I think it's all like one we can kind of chat about and think about. So their average selling price was US $1,176 a ton. They're putting out 5.2% product into the market. So obviously that's pretty much gone on a line straight down from June 30 last year to June 30 this year. And the thoughts of what that kind of looks like at US $700 a ton, which is, close to what they're probably earning, it's a bit concerning, right? I think the writing's a bit on the wall, and it'll be interesting. We'll get into it a bit later on what the kind of consensus expectations are around your operational earnings for the year going forward and beyond that, because there's still a heap of CapEx to go out over the coming period.
extremely first half weighted, that number.
Yeah, I mean, well, the operations are getting bigger and bigger, right? They had a bumper Q4, so the tons are getting bigger. You haven't actually seen the operating costs kind of come down enough, but yeah, I mean, we'll get into it. I want to touch on the kind of big news that we saw on the financial front is the new debt facility. So $1 billion debt facility, which they don't totally need. You know, they got 360 million in debt. That's from a government and a syndicated debt facility, but they're a bit more restrictive. So what they're essentially going to do is just pay them down. They'll have this 1 billion. It might save them, I'm sort of estimating here, $15 million a year, going off numbers they threw around on the call. But the key takeaway is that they've got much more flexibility here. So this is going to take into account their net debt, and the previous debt was taking into account their gross debt. So you're at an advantage when you're in a $1.6 billion cash position. You're not going to be, crimped as hard on the sides when your earnings might not be what they were, and then your leverage ratios go all out of whack. And interestingly, they got asked the question on growth again, and they're not denying it. Like, I would have thought after the Latin acquisition, they say, hey, we're not going to use this to do any more M&A in the short or medium term. But this is now the kind of second opportunity they've had to say that. And they didn't actually say it. They're like, yeah, we could. It's not our priority, but it's an option. So I think just the language and how they're speaking about that is it's pretty interesting.
Well, the fact they're getting a $1 billion debt facility on after doing an all-scrip proposal to Latin is pretty fucking – you'd be pretty confident they're keeping options open to potentially deploy it if something arises.
Yeah, I think so. And I think it's the right thing to do in the kind of evolution of the business as they go away from the debt facilities that got them online and got them to a company that's producing to a more corporate type debt facility that you can see with a company that has a bit more options, and then they progress to a company with a couple operations. It's kind of that natural progression of a company as it grows.
I think looking at like I know we talked about Sigma in the last one, and you draw parallels to Liontown in a way. I think Sigma's about $15 at the moment. Share price was up near 50. And when they were trying to sell, like, I don't know if they were getting offers around that $50 worth, but now back at 15. Liontown were getting offers from Albemarle in the low twos that they were knocking back. Obviously went up to 3, and then nothing happened because Gina got involved. But Liontown sitting at the 80 cents, I reckon they'd take an offer at $2 right now. And you would imagine Sigma sitting at 15, they'd probably take an offer at 30.
Yeah.
It's just, I think things have changed. It'd be, I don't know. Yeah. Interesting to see how the mindsets have changed by the deal makers.
But would Liontown, even if everyone other than Gina would accept $2, with Gina, she paid 3, remember?
Nah.
Yeah. So you can't get a deal done without her.
Exactly. Yeah.
I think you're spot on. It's also interesting to reflect back to that time. I'm just going off memory here, but I feel like Albemarle, when we sort of back solved it, was US 1900 long-term SC6 spot price. And now, I mean, I saw a number being thrown around earlier today, and backing out the valuation on Pilbara, we're talking about 1,200. So it's interesting. Wow. You have these people as close to the market as anyone, and in less than a year, the forecast on the commodity price, I think it just underlines how hard predicting commodity prices is. You get the people as close to it as anyone in the world, and you can have a variance that big in less than a year. It's just something interesting to observe.
Especially in commodities or chemicals, however you want to call it, that are very early in their life cycle.
Yeah.
Friggin' impossible to predict.
The thing I'm like, when you talk about Liontown too, Matty, like the one change of control scenario I wouldn't kind of put a line through is simply like, a JV acquisition with Gina, kind of similar to you saw with Azure. But
SQA,
if Pilbara and Gina did a JV and collectively lobbed a bid, that then you could understand why they've got a debt facility as well.
But wouldn't you think that is what's going to happen with Gina anyway? Because Hancock would not want to be the operator.
Yeah, I would have thought so. You're basically pegging your ground and saying, look, if you want to do a JV with me, like, happy to, like you're going to have to. You're going to have to. So
yeah. That's sounds like a lot more realistic that it would be that.
Yeah.
Yeah, I mean they'd bring the cash. They could.
Oh, that's
work in
definitely
someone
happening
else.
now.
So I think it's interesting to look at these lithium companies because you talk about how much they get beaten up, Maddie, about how they might be open to a takeover at a way lower multiple or whatever to what we were talking about last year. And you look at the earnings for Pilbara and going off Visible Alpha consensus, we're talking about operating cash flow of 420 million for Pilbara for the FY25 period. They use a midpoint of 820,000 tons, which is what they've guided to. You're assuming a margin of US $350 a ton there. So back of the envelope to kind of achieve this, you need lithium prices to jump 35, 40% from where we are today and kind of hold that for the period, which we're already a couple months into, And, you think about their cash costs, they've going off last year and what they've kind of guided a bit over US 500. I mean, where we are right now, what I saw this morning was 770 for 6% grade. So what is that, kind of 700-ish for a 5.2% product? It's it's not going to be a very cash generative next year for the company because you've still got roughly 700 million going out the door in CapEx. That cash position is going to fall substantially again over the next year.
I'll be when you're talking about the price jump and what catalysts, and I'm keen to see what Mount Holland's doing because their full year results will be out soon, and a bit of colour on them because they're you think of what's going to change. It's like low prices cure low prices, and whether how that operation's going, we don't. You had a bit of an indication before. MinRes's operations, is Mount Marion's bloody 4% spod still going to be getting sold? There's a lot of questions about, Pilbara is still going. Doesn't look like it's ever going to bloody stop. But it's when other ones, what's going on with all of them is going to give a good gauge, I think. So
yeah, definitely. I think Wessy's come out with their annual results on Thursday, I think. So hopefully we can get a bit of a read. But we've said it, we've said it once, twice, three times. Like a lot of these guys still aren't really cutting back. So we're not really at that point where the low prices are having the effect that they should. I think that's going to take a little while longer to kind of run through. And I'll just finish up with this one chart that I saw in a JP Morgan email this morning. They chucked it out in their research and they were running spot numbers through all the major miners. So not just lithium players, but you've got iron ore players, you've got kind of diversified miners, gold miners, and a few other in there. And you can see the price to MPV at spot is 6.21 times. Flashing through spot has a bigger impact on Pilbara than any other company that they threw up in this analysis by quite some margin. So I think it's quite interesting to put that into perspective and think about this, quote unquote premium valuation that Pilbara gets, and it's still not been chipped away at. We talk about how grim it is for lithium miners out there, but I don't think you've got a massive margin of safety if you're going in and buying these sorts of names, given the kind of multiples they're trading on at the moment.
Yeah. And look, we've talked, the big thing because of their expansion is, getting unit costs down, trying to survive this period, as you said, when low prices are supposedly going to cure low prices. Like the parallel analogy to that is if you've got Silverstone, you get more Silverstone. Like that's another bloody thing that probably Pilbara have got.
They were pretty much saying it in the call today, mate.
Yeah, they've got a bullet in the chamber there because Silverstone are already up there, so more Silverstone will cure lower prices as well. So I think get the whole team up there. Just deploy all of Silverstone to Pilbara, and mate, that's pretty much like $500 a ton on the spot price.
They'll be beating those consensus numbers I was talking about just before. Get them to do everything. I mean, there's a lot going on up there right now. They've got P1000, which should be humming in 3/4 of a year. You want to get there smoothly, Silverstone, get them on the job.
Oh, mate, the emissions intensity as well. Like you can save money, tick the bloody green boxes, bloody Silverstone solar farms, Silverstone bloody hybrid power stations, bloody just Silverstone surveyors, Silverstone water supply. Just fuck me, it's just Silverstone galore up there.
The buses, the EV buses, mate, all Silverstone.
Silverstone helps produce White Rock.
Exactly. Chuck it on your
The
logo.
perfect cycle.
Chuck it on your logo. More Silverstone cures less Silverstone, you'd say.
Yeah, you wanna last through this lithium rot. Get Silverstone on site.
Don't have not as much Silverstone as you need. You can never have enough. Right, JD, who's on the divvies, mate? Trav, commiserations on your Yancoal divvy, by the way.
Yeah,
sorry about that.
So these ones are just from today. So a couple divvies and a couple capital returns. So Ramelius, one that stood out, they're paying a record 5-cent divvy. No kind of secret. You look at the earnings; they were really strong. They're very cash generative because of what's going on at Edna May.
What's that about 2.5% divvy? That's not bad for a bloody.
Yeah, I think they were $2.08 last time I looked. Yeah, spot on. Pilbara, notable that they're not paying a dividend. That's not surprising. They did update their capital management framework, and it's based on a free cash flow. It's based on free cash flow, so no surprises that they're not paying out any dividends. Gold Road, they've had a pretty torrid time of it lately. They're paying out a 0.5 cent dividend. They made under 5 million in free cash flow, so disappointing kind of all round. They've had weather and all sorts of other disruptions there. Stanmore's another one, US 4.4 cents that they're paying out in a divvy. I noticed they also restructured their debt, so things are kind of moving in the right direction. You got Base Resources. They're still under takeover from Energy Fuels. That's, jiggling on in the background. They're paying out 6.5 cent special divvy. That was spoken about a long time ago when the takeover first came forth. And Metals X, I think we got a ding, ding, ding here for Mr. Ricardinho. They've actually got busy on the buyback again, which is good to see. 550,000 shares roughly were bought back. And what stood out is that they were doing this at a higher price to what they'd previously paid.
Up to 40 cents.
Yeah, exactly. Up to 40 cents. So, I mean, it's 220 grand. It's a drop in the ocean of all the cash that they've still got, but that was just one day's work. So good to see. And then lastly, you got Parenti. They keep churning away. They spent 650 grand buying back 680,000 shares. That's a program that's been underway for a little while. So good to see some of the miners and mining services companies actually give a bit of cash back to the investors out there.
Trav, you were there was plenty of people that were devastated you weren't here for the Yancoal thing. Did you want to give a bit of a recap a week later, because people were wanting to hear your opinion on what actually
I thought JD did a really fair summary of it all. Yeah, I mean, I don't have too much to add other than like it's pretty interesting observation to just see when you kind of have really, really wild kind of intraday movement, and it's a readjustment in shareholder expectations. You kind of, a lot of people owning it for the yield. Now that yield looks jeopardized. And so it's kind of like the yield investors rotate out, and you've got to sort of incentivize the growth investors to kind of come into it. And heck, you saw like a 20% intraday movement in a bloody $8 billion company. That's a pretty wild thing. But, it's not like their cash evaporated, but the huge risk with them has always just been that do you trust this management team with this shareholder group dynamic to actually make me as a shareholder a beneficiary of that cash? And like that question continues to be uncertain. They've paid dividends at points in their life, and they've definitely had periods where their dividends have been lower than expectations, but yeah, it's also, having said that, like it's not a terrible time in the scheme of things to actually be acquiring some of these assets. You can probably get them at a pretty low multiple, and like I'm a believer that these phenomenal assets will kind of command a multiple re-rate over time too.
Yeah, no, because I think what we said about and it's interesting you say that, is like when we were saying, look, there's going to be obviously a lot of competition for these assets in the sales process, but there's a lot of competition at a low multiple. So it sort of trades each other off a bit in a way.
Yeah, I don't think the competition will be as like I don't think it'll be as pronounced as sort of most sales processes you see out there. It's like good assets. One needs a lot of money to kind of get back producing. Whitehaven said we're not bidding for it already. So, like there'll be competition. Like Glencore will compete, but they won't overpay. So, like who's the most likely to overpay? Probably Yancoal, to be honest. But even if they overpay just enough to get the deal done, It's
This
probably
is
still
for the Anglo assets you're talking specifically.
It'd probably still be a decent acquisition in the context of things broadly. Yeah.
Is there anything else up for sale? Potentially.
Oh, probably. Yeah.
I mean, we didn't exactly know. It wasn't widely reported that the Illawarra assets were, and then that just kind of popped up, right?
Yeah.
That wasn't commonly held. So there are other assets around there that might be a bit off our radar, I'd say, that could all of a sudden pop up.
Where's Hags when you need him?
He'd be in the know.
Yeah, cheers for the support, Hags, on Twitter. He's like a bit of bikey support behind me. It's a bit of muscle. Good on you, Hags, looking after me. Oh, fucking, geez, aren't Axis Mining Technology looking after us?
Good on you.
And everyone else. How much more of the fucking world do they need to look after? The bloody gurus of drill hole survey instrumentation. Get them in your business as a trusted advisor. Oh. Who else looks after you, JD?
Mate, more than a couple people. Silverstone, as we said in the show, MMS, if you want to pull your mining costs down, it'd be crazy not to get them in. VRIFY, SMEC Power Technology, DSI Underground, CRA Insurance, Greenlands Equipment, K-Drill, and you would have seen a spark chart or two in today's work.
Hooroo.
You would have. Hooroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.